This is Randy Finney with the right side of the chart. This is a closing market wrap for Wednesday, February 26, 2020. What we'll do is keep this video just kind of general stock market analysis. So to that, I want to pick up where I left off yesterday, at least in the video last night, because there were some updates that I posted on right side of the chart. We closed up today, a decent day, and we were actually up quite a bit more at one point, but about a 0.5% gain in QQQ. If you were just a follower of the YouTube channel, that's a small fraction of what I post and do. I went home last night, short looking for more downside, but then yesterday at the close, but then reversed, changed tune last night around 10 o'clock. I posted this on rightsideofthechart.com for silver and gold members that looking like we were going to rally. And I said resistance levels are likely to spark a rally on the stock futures. Went on to say that while I was leaning towards more downside as of the close today, upon further review of the charts, it appears that a substantial rally is poised to be triggered on the breakout here. So let's look at those charts. So what I was looking at then is this area of consolidation here, and I also noted we had bullish divergence here on this 60-minute chart of NQ futures right there. There's your positive divergence, and we had almost an identical posture on SPY. So we had these levels here that would almost certainly trigger a little short covering rally, some buying if taken out, and they were. I went on later to revise and to add a target with a line break here, making this the first target, expecting a reaction there, and then this. So I'm still leaning that way right now. What that is near-term bullish, intermediate term bearish. I think it's just a matter of, was this it for today? Do we take another leg down, or do we get a little bit more? Maximum would be a run up to that trend line. First things first, we closed at a kind of an interesting technical level today, so I'm going to get to that in a second. But I did want to say this has played out. At one point we were up, I don't know, 2%, at least well over 1% in the Qs and in the NASDAQ futures today. And that same post last night, I followed up with a chart of ES showing you the same thing there. Breakout would most likely spark a rally. I revised these targets this morning to give you some intermediate targets, which were hit today, and that's where we reversed. So we had that. And then here are the updates I posted this morning to follow up with QQQ for your QQQ traders. This was taken. This screenshot you can see here, time stamped as always, about an hour before the market opened, and you can see that the Qs are showing, once you have the pre-market trades, you can see that area of consolidation just bumping up above that against that 217.34, and so that's where I gave you the intermediate targets there. Anytime you have an arrow break, that's where a reaction's expected. Sometimes I'll draw the zigs and the zags, the squiggles, but a reaction can be defined as a consolidation and or a pullback, but that's what I define a reaction as, and that's what the arrow breaks. So that's where we reversed today. It was right there at that first arrow break, and we still may do this tomorrow. But the way it works is resistance is resistance until and unless taken out. So I'm going to get to the updated chart in a second. I added the price line. I also had a line there at about, I think it's about 220.50 or so, somewhere around there. You can see price, some horizontal price resistance there. So the 3% rallies would be if this target's hit up here, and I'm still very much open to that. We'll see what happens tomorrow. I'm going to get to the updated charts here in a second. I just wanted to show you this one from this morning, as well as this one in the futures. We'll zoom in a little bit for you. There was NQ. NQ had to take out this 89.49-ish level right there. Trigger a rally that would take us up here to 90.44.35. You have a trend line, and so this is just like that QQQ chart, and then ultimately up here again, that's still the target I'm leaning towards. If the futures can hold up tonight, hold really about where we pulled back to today. Otherwise, I'll show you the bearish scenario, which is still very, very much a possibility right now, and that's what I keep preaching, which I often do, is be flexible. Don't ever be married to any one view. The market must do this, the market must do that. Especially don't fall victim to confirmation bias, which is seeing what you want to see in the charts to confirm your view or your positioning. And that's why flipped last night from going being near term bearish and short to near term bullish and long, and we'll see where we go from here. But that was the NQ this morning posted. Went down, gave you and this one as well, and I wanted to talk about here. So this kind of sums up my thoughts here. It's a little bit busy chart, a couple scenarios, and I don't like to do that because I realize, and I said this here, there's an infinite number of scenarios, possibilities, what the market can do. But what I think is most likely is, had we failed today, and that's something I had to recognize, if we didn't break above that 217.84, which we did, we would have most likely gone down here to the next support, which is at 211.42. We would have taken out yesterday's lows and the early session lows and gone down there, but we didn't, and I made it clear that this is the way I was leaning towards. So what we did do is go up here. We hit that target today. Now this is what I'm saying. This may happen, and if it's going to happen, it'll probably happen tonight with the futures going down. Take out today and yesterday's lows. They were equal lows. QQQ and NQ effectively put in a double bottom. It retested yesterday's lows today, at least on QQQ, that is. And that is certainly a possibility. Now, it actually has a potential to be bullish if and when we get there. So should we take another leg down now without going up and hitting that additional target? I'll be watching this. We might put some bullish divergence here on the 60-minute chart of QQQ. We already had it on the 30-minute. We had it on the 60-minute chart of the futures. And I just wanted to say that, this is where, I'll flip-flop from either close out longs or flip back into shorts to try to catch us one more thrust down, because the markets have had some technical damage inflicted. They held up today. The Qs were up today. And this is just reflecting. I took this screenshot in pre-market, but it's showing you yesterday's close. That's how much the Qs were down then. Okay, so let's look what happened. Again, this was this morning. There was the next buy signal to come, breakout 217.34, which I made clear was my preferred scenario. Have a reaction here, and then if and when we take that level out, that would give us our next buy signal. So let's look at that and see what happened. All right, there's the same chart. So what we're looking at here, this is a live chart, today's chart. 217.34 was taken out this morning. From there, it was good for a rally of about, if you weren't already long, you still had a chance to get in and gain about 1.36. Right up there, as I said, there was a trend line plus this 220.25. That's the level right there. You're looking at these reaction lows from yesterday, the recent reaction lows. And so that's what capped the advance. We pulled back. As you can see, I'll zoom in real tight. QQQ managed to remain above yesterday's lows, and it wouldn't matter if we went a hair below or reversed a hair above, which we did. That's effectively a successful test of today's lows. And so what it does right now, it keeps alive the potential for a rally. Now I'll say this: the fact they faded today's rally so hard, and I do need to impress, we still closed green, and every FANG stock, all the market leading, what I call the FANGs, FAAMG, not FAAN or FANG. I don't count Netflix as not one of the top components. It's a heavy component of QQQ, but it's not nearly the weighting that the FAAMGs have. That's Apple, Microsoft, Amazon, Alphabet, and Facebook. Those five alone are the big weights, the big 500-pound gorillas in the in the Nasdaq 100 and the S&P, and they were all green today, as was QQQ. So you have to say that's a plus for now. It helps support the case for a potential rally. This can very well be just a consolidation, dead cat bounce, pause along the way on the path to new lows, and then if so, I gave you the targets to look at. Pretty much if we break much below today's lows, there's some little minor support there about 214.37, but that opens the door for a move down here, that 211.42 target, and maybe if things get real ugly down here all the way to 205.64. That is certainly a possibility, and I can promise you I will not be long that on the way down to 205.64 or even 211.42 if that is the case, if that is what happens. But what happens when the market holds up today, number one, at least for now, you don't have any more forced margin call selling. This is part of what happened yesterday. If you were wondering, how could QQQ drop so much, especially on the heels of a big down day, last few days, how does it keep falling? This is what I talked about. It's the unwinding of a one-sided crowded trade, and there's also, in addition to stops being hit on long positions, there's forced margin call selling. Those people that were loaded to the gills with Facebook and Apple and Amazon and QQQ or NASDAQ futures, the brokers are calling them in. They're blowing them out of their positions because they're having margin calls. When you drop that much and you're leveraged up, and so what'll happen is we'll probably see another impulsive leg down if we can't hold above this level. But today we're green, so longs aren't getting margin calls when the market's up right now. Let's just kind of generally speaking. So if we can hold there, great. If not, we have another thrust down coming, so you need to be ready for that and adjust accordingly. Is it it's a most objective time? Well, it depends. If you get in, get out, you get a short entry, and then you can set your stop above, and you might be able to swing down to one of these next targets. You just have to be an active trader and use stops in case it goes against you. So as of now, I'm still leaning towards this tomorrow, pop up there. And now where I'm going with that also is we already hit my first target where I expected a reaction, that point right there. And so if we come up to it again, since it's already been hit, we had the initial reaction, that I expect on the first tag of it, we go on through it. That'll be tomorrow. If we get anywhere close to that, I think that'll be the case. I could be wrong. Maybe we consolidate under there. If so, it just means that's a level. But again, it doesn't matter because the next buy signal comes on a break above that level, and it's about 220 and 220 and a quarter. So that should take us up here. That is a massive gap. A lot of eyes are on this gap. If you're targeting the bottom of the gap here around 224.18, I wouldn't try to milk out every last cent. You want to probably take profits a little bit before that level. When all eyes are on one level, what usually happens is one of two things, because Mr. Market doesn't make it easy. You're either going to reverse just shy and leave everybody that was holding out for that, test to the bottom of that gap, let them miss out on the fill, miss out on exiting their longs, or shorts that are looking to short that level that are waiting to see 224.18 or 224.10 hit. So the market will probably do, again, one of two things: either reverse a little shy if it even gets there, or pop on through there. And then what that does is everyone that stepped in to short the bottom of the gap, they start to cover here, and then Mr. Market will reverse. It's one of many possibilities. The standard thing you say is a gap once entered becomes backfilled, whether it's entered from above or below. Either way, it's a level to trade around, and it's certainly a target right now, and that's where I posted this morning. If that target's hit, that's about the 3% upside I was referring to this morning, if we can get there in the next few trading sessions, which, if we're going to do it, volatility's high, we'll probably do it soon. And if not, then you have about another downside from here where we closed today. You have about another 2 to almost 5% downside, and at that point probably come in and have a decent rally. We'll see. As long as the markets don't hit meltdown mode, it's possible, but probably not at this point in time. I think we're getting closer to the end of this initial leg down than we are in the beginning of it. Okay, and then below this morning's post, this morning's the one in pre-market today, somebody asked about SPY. I did a video, and at the time the video was being uploaded, so I posted this chart. Somebody asked SPY where the levels were, and that's what I said when I was doing the video. I said this was my first target, 317.77. SPY was up at that point in time 1.36%, and so I said we're at resistance now, and that's an objective level to take profits if you're an active trader. Recycle back in on a pullback, or wait for both 317.77, which again, first target on SPY, the next target's there at 320.50. Wait for that level, as well as the level we were at at the very same time as I was doing the video this morning after the market opened, right there at 225. So I said the same thing. Both SPY and QQQ are at resistance, and like we say, resistance is resistance until and unless taken out. So an active trader could have booked profits there, wait for the breakout and jump back in, or wait to buy back on a pullback, and that's what you had today. Or just take your profits, get out. You made 1.5%, 2%, whatever, get out and wait for the next objective entry. So brings us back to where do we go from here? Well, let's watch those levels tomorrow. That we hit them today. We had a reaction off that level. If we get back there again, it's still resistance, but we already tested it once. We'll probably pop through it, is my guess, if we get there. Otherwise, that's it. The counter trend rally's over. We're still in a downtrend, near-term downtrend. And on SPY, I don't have resistance until we get back down here to about 30, or support to about 307.23, and so you're talking about another 1% downside from where we closed today. Don't have positive divergence, at least not, it's tiny little divergence there, and that could play out, but that's the SPY 60-minute chart. Now, something to mention, somebody on the site mentioned it today. I believe I mentioned it yesterday. SPY was actually underperforming QQQ both yesterday and today, and that's not common. What happened, what the big laggers, what's holding the S&P 500 back are financials, which were down 0.73% today, but at support. This is another reason that I'm leaning towards a bounce scenario here. We have financials, sharp correction, but right down to a pretty solid support level there. But they were dragging it down yesterday and today. We have discretionary. By the way, guys, I'm talking fast. There are 11 sectors in the S&P 500, and I have a watch list of those 11 sectors, the ETFs that track those sectors. Here's discretionary. Breakdown below the trend line, bearish, nothing but bearish. However, look where we went to today. Okay, guys, this sucks because somewhere along the line I had hit the pause button on this video and I kept going for a little while and I don't know where I stopped. So I'm picking up at some point. I know I had started on those bounce targets on SPY, and what I had led into was the fact somebody on the site had mentioned, and I believe I did bring it up yesterday in the video, that the S&P 500 was actually down more than the NASDAQ 100 yesterday, meaning SPY was down more than QQQ, and again today, and that's not common. That's pretty uncommon, and it's not a great sign for the market. However, the most important things were that market-leading stocks were all up today, as I believe I mentioned earlier. Apple, Microsoft, Amazon, Alphabet, and Facebook. Those five are what I call the FANGs, the top 5 components of the NASDAQ 100. They're also top components of the S&P 500, and they were all up along with QQQ. Now, the good is that the market leaders are up. The bad is they're holding the market up. There's more weakness under the hood. So let's just talk about that. That's what I was, again, and if I left off somewhere else, I'll have to watch the video, and after I wrap it up, there's no way for me to go back once the video is recording to see exactly where I stopped. But I wanted to make mention then again that SPY was down more today. It closed actually flat with the NASDAQ 100 up. I'm sorry, not flat, down 1/3%, 0.33. And again, QQQ was up 0.5%. And what's weighing on the S&P 500, you have financials, XLF. There's 11 sectors in the S&P 500. This is one of them, makes up about 13%. However, I have it down to a pretty solid support level, and this is one of many reasons why I'm still, why I'm gonna, went home long, and will, still favoring a bounce here because we have a lot of key stocks and key sectors that support. So that's what I'm doing at this point. I'm showing you XLF is at that 2864 support level. Again, you can see a lot of reactions here, here. Finally broke out right here, and that was a major breakout. So this is the first back test of that level since the breakout. And again, that's the level that contained all rally attempts going back to early 2018 there. So now coming under heavy selling pressure lately, but again, it's down in just a few days. We're down 9% in the financials. Anything's possible, but I'm leaning towards a bounce there. The other things holding the market down, consumer discretionary. But although I do have XLY, the consumer discretionary ETF, between support here, what happened? It broke the trend line support. That was probably the most important level right here. Trend line support and that 122.44. That was a big level. That's what had capped it. We had a breakout right there. We successfully back tested the breakout, but now we failed it. So all in all, that's bearish, the fact we failed the breakout. But we see where we're at with this red line here. That's the 200-day exponential moving average on some securities, not all, but a lot of stocks or indexes or sectors. It does a good job of defining acting as support and resistance. And you can see here in every single instance going back to right here in early 2019, every single instance where XLY pulled back the 200, the buyer stepped in, and you would have had this, and this if you bought these last three pullbacks to the 200-day. I like to say support until unless broken. It could break. If it breaks, you do have a price support below at 1935. And then I don't have much down here until about 11.13, but it is again down quite a bit at support. So, and oversold. The last time, or second to last time we hit the 200-day from above was right here. We were oversold then, and that was a good time to buy. The time before that we hit the 200, you got it, we were oversold again. I'm talking about the 30 level on the RSI. So there's a lot of similarities here to back here when we bounced. And so put it this way, the market's at a pretty critical juncture. A lot of these sectors are, just because we bounced before doesn't mean sooner or later the 200 will break and it'll give way. When it does, then you have bigger corrections. So as of now, like I say, support is support until unless broken. So I just showed you financials and now XLY. And again, these are I'm focused on these because they're the ones that have been leading the market down, the S&P 500, the last 2 days. Industrials, XLI, down big as well. It's not the most solid support level, but it is a level that I had on my chart before at 77.14. So maybe we'll get a bounce on the industrials there as well. And the other thing, energy is just melting down, but guess what? Energy doesn't move the needle. I remember years back it was, if I'm not mistaken, the largest component of the S&P 500. But now it doesn't even move the needle. 4% weighting. What moves the needle is this, XLK, the tech sector, which is the largest sector in the S&P 500. Nearly a quarter of the returns of the S&P 500 come from XLK. And I have that at trendline support right here. So there's another reason. It's in the face of larger bearish developments, divergent high, negative divergence, everything else there. So I do think that this line will go. To me, it's just a matter of, does it go now, meaning tomorrow or very soon, or do we get a reaction off there? And I'm leaning that way now. So what I'm looking at, if it holds tomorrow or into early next week, there's a big old gap right there. Same gaps I've been targeting on SPY and QQQ. We can run up there, come down, and then take it out, or we take it out now. So we'll see tomorrow, level to watch. But what I can tell you with certainty, I can't tell you if we're going to bounce or break it, but I can tell you we hit support. And so you have the most important, single most, by far, important sector of the stock market at support. Add to that, I'll one up it there, the by far single largest stock in the S&P 500, NASDAQ 100, largest weighted component is Apple, and that is also at support. So you see this trend line comes off the June 3rd lows. Lots of reactions along the way. We haven't visited in a while, but we did today. And yesterday, and that's hence another reason, that I, like I said, think that there's a possibility to bounce. There's a gap right there. So you can see the targets. If we do bounce 303.63 from the lows today where we hit that trend line, that would be about a 6% rally to get to the top there. Backfill the gap, be about a 9% rally. It's almost impossible to see the stock market drop if Apple rallies 6 to 9%. Doesn't mean Apple will. And the other thing, look, I'll be very clear. The longer term or intermediate term outlook or posture for Apple is bearish. You have this divergence that's been building, negative divergence. Last time you had a little bit, almost flatline divergence there, and you did have a pretty sharp and fast correction, nothing huge. Here you had a divergent high, clean negative divergence, rising wedge, trendline break, and from there, that divergent high was probably about a 20 something percent drop, and Apple dropped, just in the last few sessions here. This stock has given up 13%. So I said that this morning. Look, it's very oversold. People love Apple. 13% drop to trendline support. I'm long right now. If I prove to be wrong, then I won't be long. Wrong means we break, Apple smashes through here tomorrow, Qs take out the recent lows, and then if that's the case, I could tell you right now where I think Apple is going, and I think it's going to get there even if we bounce first. So ultimately, it's going to get here in the coming weeks, but I think is down here to 255.74. You have the 200-day moving average, which does a pretty good job. It's a very good job historically of acting as support and resistance on Apple. Comes in perfectly right now with this 255.74 support level right there, and that would be if depends on where we break down. If we took out the trend line tomorrow, I'm moving the crosshairs right here to measure down percentage terms. That's about a 10-11% more downside in Apple. And if that trend line gives way with conviction, especially on a solid daily close below, we're probably going to do that. So I guess the theme of this video is stay flexible. Don't be married to any one, bias or one scenario. The market must do this or that. But I made the case that Apple, along with a lot of key sectors, is at support, oversold near term, but not extremely or not very oversold. In fact, it didn't even hit the 30 level here on the daily chart. So there's certainly the potential for more downside, but I think the odds are skewed towards a bounce tomorrow. And but again, we're walking the line. We're flirting with those lows, or we did today. Here's QQQ. That's yesterday's lows right there. We effectively tested them today, and like I said, a break below there is likely to usher in, have some more stops hit, and give us one more leg down. So we'll see. The futures can be a little wonky. Futures might want to make a run down below tonight, maybe not. But again, I suspect more upside tomorrow. This was today's high. There's that same 2025-ish target I had on the daily chart on QQQ. That was hit today. Again, gave active traders a chance to take profits and recycle back in. In fact, I posted that on the site today. I followed up with this 1 minute chart right here saying that's an objective level to go long on QQQ before we even got there. Yeah, there it is. Sorry for the pause, silence there. I thought I'd paused it. All right, that's it. 216.20. See, that was earlier today. It's an objective level to go long. We got a little bounce off it, but and that was right there. We were a little bit above it. We hit it almost to the penny. Got a bounce. Didn't go as far as I thought, but we're back there now. I mean, we just undercut it ever so slightly, but we still stayed above yesterday's lows. And so, and I think we're looking at the after hour trades. No, we're not. There we go. So we're a little bit below it now. We closed the day above it, but we're still above yesterday's lows. Again, the futures, they may want to blow out some longs and suck in a few more shorts in the future. So I'm more concerned to how QQQ opens tomorrow. Unless the futures tank overnight, we can gap way down. If we do, then obviously we're going lower. But we'll wrap it up here, guys. I'm still leaning this way, and if we do, like I said, that gives us, from where we're at right now, should be around my 3%. No, now it's actually 4% because we're a little bit below those breakout points earlier. So that's as much as a 4% upside potential on QQQ. And like I said, if wrong, boom, there's quite a bit of downside. So stay flexible, and I'll give an update tomorrow after the market closes, regardless of what happens now that volatility is kind of perked up. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.